Hello, in this video, I would like to show you how I look at balance sheet and balance sheet basics. So first of all, I would like to just click on this cell right here, and then under View tab, you will see Freeze Panes. And now I can see the headings. So let's start with the asset sides. Under assets, we have current assets, which are the assets that you can basically convert to cash within 1 year. And within this category, I would like to first talk about total cash and short-term investments, which is row 21. Let me just color this one. And here we have cash and cash equivalents, short-term investments, and trading assets of securities. So now if I look at these numbers, you can see that Apple has $93 billion of total cash and short-term investments. That's quite a bit of money, almost $100 billion. And also, if you look at the total receivables, these are the things the company is expecting to receive. You can see account receivable and other receivables. Companies expecting to receive around $32 billion. And you can see the other current assets here. For example, inventories, another line item. That company has $3.9 billion worth of inventory, which is very low if you look at the other numbers here. And then you can see here the total current assets for Apple is $140 billion. Again, if Apple needs cash, we can assume that within 1 year, Apple can get $140 billion of cash by converting these securities, these assets into cash. Okay, and so let's take a look at some more long-term assets that Apple has. For example, net property, plant, and equipment. You can see that company has $43 billion. Again, if you look at it here, company has property, plant, equipment of 109, but company depreciated $65 billion of that. Again, this is an accounting trick. Sometimes this depreciation values may not represent the reality, because, for example, if you own real estate, you depreciate the value of the property depending on type of real estate between 27 and a half years to 40 years. But that doesn't necessarily mean that property value decrease in 10 years or 5 years or 15 years. Actually, it could even go up. That's why we gotta be careful about net property, plant, and equipment situation and depreciation. Also, we can see the total assets value for Apple, which is around $317 billion of total assets. This is a good number. However, if you remember my first video, currently the Apple is valued at $1.9 trillion, almost $2 trillion. So if you look at the total assets the company has versus the valuation, you can see big difference. So people are willing to pay Apple a very premium price, so that they think that company creates good cash flow, and that cash flow will continue to grow in a great way. Just give a benchmark for you guys. Another thing that investors must be careful about is the intangibles and goodwill. So Apple doesn't put any intangibles or goodwill here, but sometimes when you mergers and acquisitions phase, you may end up having some goodwill, which may have some value or no value to investors. So we gotta be careful about those as well. Then on the other side of the balance sheet, I would like to talk about liabilities. Again, a recap: assets is equal to liabilities plus shareholders' equity. So when we look at liabilities here, you can see the current liabilities is $95.3 billion. So these are the liabilities that must be paid within 1 year. And $95 billion current liabilities versus $140 billion current assets. Looks like the company has plenty of money to be able to cover that. Actually, even the total cash and short-term investments was almost enough to cover all the short-term liabilities. So in terms of cash position, company is in good shape. So if you look at here, the long-term debt, looks like Apple owes $94 billion long-term, and they have long-term leases of $8 billion. And overall, if you look at it here, total liabilities the company has is $245 billion. Again, assets 317 billion, 245 billion of that is supported with total liabilities. That being said, you can see the total preferred equity. In this case, they don't have any preferred equity. And if you look at the common stock, basically leftover, which is $48 billion of common stock that company has. And you can see that retained earnings and so on. But if you look at total equity of the company is $72.2 billion. So this is the total equity of the company. And total liabilities plus equity, 317, which is equal to their total assets. You can see some more items here, like for example, supplemental items, total shares outstanding on filing date, and you can see book value per share and so on. So you can look at the net total debt, for example, another important measure. You can see some supplemental information here that can help you to better understand the company. Again, if we do a recap, we really want to understand the total cash and short-term investments. These are really liquid. And then we really want to understand total current assets that we can convert into cash, hopefully within a year. And we need to understand the depreciation and gross property. It's good to understand the impacts of goodwill and other intangibles. It's again good to understand the total assets that company has. And it's better to understand current liabilities of the company, what's the long-term debt, and total liabilities that company has, and total equity the company has. So this is a short recap of a balance sheet example for Apple. That's it for this video. Until next video, enjoy valuations.